So tell me, what happens when the most important data of the week simply doesn't arrive? Markets don't panic, they pause, squint at the horizon, and start trading on vibes instead of numbers. Welcome to a session where no NFP once again becomes the headline.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
So, good morning. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today, we are unpacking a market caught in limbo. No US jobs data on Friday, a cautious US dollar, a resilient Aussie dollar, rising geopolitical tension in oil, and a German equity market flirting with indecision rather than conviction. 4 stories, one theme: uncertainty with structure. So let's start with the big macro wrinkle. Due to partial US government shutdowns, the US Bureau of Labor Statistics announced that key US labor market data has been delayed. This includes job openings data and Friday's highly anticipated January non-farm payroll report. So, with no fresh labor signals, markets are initially flying blind. The US dollar index held around 97.4, pausing its recent rally as traders dialed back on conviction. Yes, the shutdown has technically ended after the US president signed a $1.2 trillion budget, but uncertainty remains, particularly around funding for the Department of Homeland Security. At the same time, the dollar continues to draw longer-term support from strong US manufacturing data and expectations of a Warsh-led Fed that may move more cautiously on rate cuts. That being said, markets still anticipate 2 Fed cuts this year, potentially one in June and then one in October. But without jobs data, confidence levels remain selective. Think of it as trading with one eye open and one eye on Twitter. So let's head over to the forex market, where the Aussie continues to quietly impress. The Australian dollar pushed towards 0.703, hovering near 3-year highs after the Reserve Bank of Australia raised rates for the first time in 2 years. This wasn't a symbiotic move. It was a signal. Markets are now pricing in an 80% chance of another hike in May and roughly 40 to 46 basis points of tightening throughout 2026. Support also came from Australia's service sector, which posted its strongest expansion in nearly 4 years, reinforcing the idea that growth is slowing gently, not stalling. Meanwhile, an indecisive US dollar has given the Aussie some breathing room, allowing AUD USD to hold above the psychological important 0.7 level. Looking at the charts, AUD USD is trading near 0.7021, holding above key support. Levels to watch are as follows. Upside resistance is currently sitting at 0.710 and then 0.727. Immediate support is currently sitting around 0.689 with deeper support at 0.67 and then the $200 EMA near 0.658. Momentum also remains strong with the stochastic, which is currently elevated near 70, flirting with overbought territory. Translation: the trend is strong, but chasing it without confirmation could feel like sprinting uphill. Now let's talk energies, where geopolitics took center stage. WTI crude oil climbed towards $64 a barrel, extending gains after reports that the U.S. military shot down an Iranian drone near a U.S. aircraft carrier in the Arabian Sea. Add to that Iranian vessels challenging a U.S. flagged oil tanker, in the Strait of Hormuz and continued tension ahead of scheduled US-Iran talks on Friday. And suddenly, risk premium is back on the menu. Oil also found support from the supply side. US crude inventories fell by 11.1 million barrels, the largest draw since June, if confirmed. And OPEC Plus expects demand to pick up from March or April, with a decision on output increases due on March 1st. That combination, geopolitics plus falling inventories, is doing the heavy lifting. So if we are looking at the charts at the moment, UTI is trading near $63.50 a barrel, maintaining a constructive short-term structure. From a broader lens, crude is up over 9% on the month, but still down more than 10% year on year. Near-term resistance is currently sitting at $64 a barrel, followed by $66.50. Support is currently firm at $62 a barrel, followed by $58. So in other words, momentum is improving. But history reminds us that this market doesn't move in a straight line. Let's wrap up today in Europe, where conviction is being tested. The DAX hovered near 24,800, close to recent highs as investors weighed corporate earnings, sector rotation, and lingering macro uncertainty across Europe. Gains were driven by industrial and energy names, with companies like Daimler Truck and Siemens Energy standing out. Meanwhile, tech-heavy names and online retailers faced pressure amid AI-related concerns and competitive challenges. The broader picture, Europe isn't collapsing, but it isn't sprinting either. The DAX reflects that reality quite perfectly. Cautious optimism with a nervous edge. Looking at the charts, the index remains near key resistance zones at 24,900, followed by the all-time high around 25,420. Support has held on recent pullbacks, with near-term support sitting at 24,500, followed by 24,200. And price action remains choppy rather than directional. So in other words, this isn't a breakout market. It's an decision market. And the next sustained move will likely need a catalyst. And right now, that catalyst hasn't clocked in yet. And all of this brings us to one key question facing markets today. How do markets behave when the data they rely on is simply not available? Will risk assets continue to draw support from technical structure and relative stability, or will the return of labor market data later in this month challenge current assumptions? The next session may offer early cues as to whether this pause represents nothing more than a breather, or whether it's the calm before the next significant macro driver move. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the brokers that gives you an edge in today's markets. Simply head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.